You can support this podcast for $3 a month at patreon.com/Copytraders Club. Or find me on eToro, username Gavin Macaulay, and add me to a watch list for future content. Thanks for listening. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. My aim as an eToro enthusiast is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. Here we go. Hello and welcome back to Copytraders Club, Season 3, Episode 28. And today we welcome Cristia Calle Mercado, otherwise known as CCalle. Bienvenidos al Copytraders Club.
Thank you very much. I'm very happy to be here.
Well, tell us where you are, first of all.
Well, I'm currently in Australia.
Australia.
Yeah, that's why it's dark today already.
Okay.
But
right. Now, I have to remember the order in which I do things because it's been a little while since my last Copytraders Club. So we do this thing whereby in order to gain access to the VIP section, you have to answer a series of quick-fire questions. You ready for those?
Of course. Let's go for it.
Username on eToro.
CCalle.
Date you joined eToro.
2014 as for the platform, but I started investing since February 2020.
Date you became a popular investor.
31st of May 2020.
Year of birth.
1992.
Place of residence.
Currently Australia, but coming back to Spain in December.
Profession.
I'm in the finance department of a Spanish company.
Briefly state what you aim to achieve on eToro.
Compound my wealth.
Name one of your investing heroes.
I would say Charlie Munger, since he's here right with me.
He's one of the two busts.
Yeah.
And who's the other one? Felix
Warren
Felix?
Buffett. Almost.
Name one of your favorite investing books.
Oof, I have many, but if I had to go with one, I would say The Education of a Value Investor by Guy Spire. It's a very interesting one, especially if you want to know all the basics.
Well, that completes the formalities. So let's proceed into our VIP section here. This was all done when it was audio only. It doesn't work so well when it's video. But we're about to, notionally at least, enter the Copy Traders Lounge. Cristia Calle Mercado, are you ready for this magical transition?
I am.
Okay, so here we are now notionally in a different location. It's much more splendid than the one we were just in. So let's get to know you a bit. Cristia Calle Mercado, that's an interesting name. If I was to make a stab at translating that, it would be something along the lines of Christian street market.
Indeed, yeah, that's the translation. Funny, right?
Yeah. I mean, having the market is your surname. It'd be better if the market was your middle name, then you could say that. The market's my middle name.
Yeah, exactly. Actually, I have very funny stories about my name because in Spanish, Calle Mercado sounds like an address. So when I go somewhere and they tell me, what are your surnames? I'm like, Calle Mercado. No, not the address, the surname.
Oh, I see. Yeah.
Yeah, so It's always funny to explain. It's not an address. It's my real surname.
And is that a combination of two names, like the Mercados and the Calles or something?
No, not really, because in Spain, we have two surnames. The first one is it used to be for the father, and the second one for the mother. Although now you can put whichever you want first, but it's one for your father's family and the other one for your mother's family.
Okay, it's an interesting name. And you go by CCalle on eToro.
Yeah, indeed. It's the C for Cristia, of course, and the Calle.
Nice and simple. So how did I come across you? I'm not sure what the answer to this is. Is it, as is often the case, the aforementioned Felix Falix, or is it just seeing you on eToro, or other people mentioning you in different episodes or something? Do you have any idea?
Well, I guess that you know me because of Felix Falix at the beginning, probably. But I was recently with fund manager Sec in a meeting here for eToro in Australia, and he told me that he would write to you for the episode. So I guess that is why we are recording today.
Well, see, he's a person of such influence, Zach. You see, he merely has to click his fingers and things happen. So he's moved to Australia now. He lives there.
Yeah, he just had a baby, so he's around here in Melbourne, actually, because I'm in Sydney. But yeah.
You're in Sydney, and he's in
Melbourne. Yeah,
in Melbourne. And how long have you been in Sydney?
For about a year, give or take. Yeah, I was previously in Mexico as a CFO of this company I'm working for the branch that we have there. And then I moved to Spain, and then I moved here temporarily, but here I am still. So
okay, well, we'll talk a little bit about your educational and professional background in the next section. For now, let's get to know you a little bit better when I ask you to tell us something you're very bad at.
Well, I'm bad at many things, but I would say that the worst thing for me is manual crafts. I'm too bad with those. Like I have a funny story here, which is you probably know the program Art Attack, right? I think it was also
Art Attack, the program.
Art
yes.
Attack. Yeah, exactly. So when I was a kid, I tried to create a smiley sun with this mix of glue and water, and and it was a gift for my parents, and my parents hid it in a wardrobe because it was so awful that they didn't want to see it. So I'm very bad with crafts.
Very bad with crafts. An answer I often get from people on Copytraders Club is they're terrible with things around the house, DIY and stuff like that.
Yeah, kind of thing. But to be honest, it's not like this furniture that you see, I build those with my wife, both of us together. So not too bad. But yes, with crafts, like being creative with my hands, is I'm not very good at that.
If I asked your wife, would she claim that she did most of the work and you stood about looking at instructions upside down?
Yes, some of the time, yes. Yeah.
Okay, let's have a question from the art of people. If you can give me a number between 1 and 10 that isn't 7, because everybody says 7.
Let's go with number 8.
Other than a family member, tell me about your role model.
A role model. That's a very hard question. Well, I guess it depends. If we speak about the investing world, I will go for Charlie Munger. Outside of that, I don't know. I mean, yeah, in the investing world for sure, Charlie Munger. I think he's the investor I'm more alike. But in the everyday life, I don't know.
It's a funny question, isn't it? I don't know if I would have an answer to that in real life. Who's your role model?
Yeah, Rome. It's very tricky. Well, I like a lot Camus, the writer.
Albert Camus.
Albert Camus. Yeah, exactly.
Oh,
I love
surprised
his...
you're prepared to do any investing then. What's the point?
Yeah, indeed. It's very tricky. Well, I like how he thinks and his philosophy. So I also like Marcus Aurelius is in English. I have his book around here. Yeah. So Stoicism is
that often gets mentioned, doesn't it, by investors? It's a good read.
I've been surprised to see that so many people were into Stoicism lately, especially. Yeah, it's always good to see that people go for that. Indeed.
Well, helps you keep a cool head when conditions are challenging, I suppose.
Yeah, in everything, in investing and also in life, because not always things go as you want them to go. So it's good to have this view of the world.
Okay, so we're moving on to the next section, which is your bio and pinned post. Have you got your eToro bio in front of you, Cristia?
Yes, I have it.
Oh, wonderful. Okay, in that case, can you read from your bio maybe the two sections, strategy and reasons for the strategy?
So regarding strategy, what I have here is intrinsic value calculation, margin of safety, patience, and process-driven analysis.
And reasons for the strategy?
And then regarding the reasons, yeah, it's companies protected with moats, deliver better long-term results. Outstanding companies deliver better results in bad times, minimizing operational drawdowns. And companies with moats bought at reasonable prices protect our capital better.
No leverage is or will be used.
No leverage.
Okay, so you mentioned in this section here, before the link to full bio, return since inception, 3 years and 8 months, 60%, outperforming S&P 500. If Felix Falix was to get his calculator out, would that stand up?
Yeah, it does. I have my own spreadsheet for that. So yeah, it's all accurate.
And how often do you update that?
I try to update it every month. So every time I do my monthly post, I update this information. It's been going down lately, but the performance is still in place. So it's a good annual rate of return, even after going through 3 pretty bad months.
Maybe I should put up the full screen of this so people can see it more easily. Official eToro value investor. Tell us about that.
Well, it is a program that eToro took during the pandemic. They spoke with some of us via Zoom meetings, and they asked us to provide our strategy and how we do our intrinsic value calculations and what is our philosophy and all of it. And it was carried by Matti Alon, which is now also the chief editor of eToro, for all these courses that they are providing for free for the eToro community. So yeah, we some of us took that interview, and so they created like a group of value investors, and we have a Telegram group, and it was more useful, especially at the beginning, because we used to share ideas and all of it. But I think it died slowly during the time, and now it's not a very active group. But I think it was a very, very good idea and a very good initiative by eToro.
Okay, just realized my name is displayed in the way that I display it on another thing that I do. Okay, and then let's have a look at your goal here as you express it. Achieving a double-digit average return yearly. That's a bit of a funny goal for a long-term value investor to set. Is it not?
Yeah, it's. I mean, well, the idea is to outperform the benchmark, which is the SP 500, but also you have to consider returns in absolute terms, not only in relative terms, compared to something like compared to the SP 500. So I would be happy if I can compound my money and my copiers in a double-digit scenario yearly, because I mean, compounding does a wonderful job in the long term. So that is the goal. It's an absolute goal and also a relative goal. Yeah.
Do you feel that you have to sort of express things in such a way that they will be heard by the copier community the correct way? As a value investor, I think one of the things that I often get the sense of is that value investors, proper Buffett Munger disciples, are happy to do very little for years and years as long as ultimately it all works out beautifully. That doesn't cut it on eToro, really. You know, you have to express things on a shorter term basis, right?
Yeah, I mean, I think this way. So you have two ways of approaching eToro. One is sharing knowledge, which I think I do, and sharing your possibly unique perspective on some businesses and maybe valuations, although valuations, it's always a bit tricky. And then you have the PR approach, which is like when you are going through a very good short-term performance, you just spam the feed saying, "Hey, I've been having a very good result lately." I mostly do the first, but sometimes you have to do the second as well to promote what you are doing, because and luckily, like, people consider best the short-term boom of a share of a manager or whatever, and that's probably the worst time to copy or the worst time to invest in some asset, but it's always driven by marketing. So you have to know what your game is, but the
So
focus is always in the process.
people should be buying the dip in Cristia then. Is that what you're saying?
Definitely. Yeah.
Oh, okay, so your background here, you mentioned former CFO, Mexico and Central America at CCalle, I think that's pronounced. Is it?
CCalle, yeah, indeed.
But
that's right. Yeah, CCalle.
I bet the Australians aren't queuing up to say CCalle.
No,
You work for
it's hard.
Size.
It's hard to size. They call it sizey.
Spicy.
Maybe with a yeah, sizey. It's always funny.
And tell us
The
about
pronunciations of the company.
CCalle. What is CCalle?
Well, CCalle is an engineering company. We are mainly working for infrastructure projects. In Mexico, we used to work a lot with tolling systems. We used to do also oil there, like flux control systems and all this stuff. But here in Australia, we are mainly doing tunnels, the engineering for the tunnels, the ventilation, and all the traffic-related intelligent systems. That's what we do here. And I'm part of the finance team. Not the engineer, just in the finance team.
Okay, so you were CFO for Mexico and Central America. Now you're management accountant in Australia for them.
That's the official name, yeah.
So, yeah, is it the similar job?
Well, yeah, mainly. The only thing is that here we have a CFO that I report to, but I'm mainly involved with projects and the finance of the projects. So it's pretty similar, to be honest. Yeah, there's not much a difference.
So, did you live in Mexico and Central America?
I lived in Mexico City, yeah, for almost 5 years. Yeah.
5 years. They don't call it CCalle there either, do they? CCalle.
CCalle. Yeah, they pronounce it with the S.
How was Mexico City? Massive population.
Yeah, massive population. Yeah, I lived there during COVID as well, which it was, I think, more relaxed than it was in Australia for sure, and in Europe. But it was tough times to live anywhere in the world. But I loved Mexico. I loved Mexico City. I visited a lot of places. I also went to Guatemala, where we also had some business. So yeah, I was traveling around.
So I've heard from people who've lived in Mexico City before that even though it's a huge, sprawling, densely populated place, people can live kind of very small local life in little neighborhoods and villages. Is that what you found? It didn't feel
Yeah,
like you were always in an oppressive, huge city.
yeah. Actually, yes, that is what happens. I think everywhere, not just in Mexico or everywhere I've lived. I always have lived in like my little part of the city where you are closer to everything. There are restaurants, there are malls, there's everything you need nearby, so you don't move much. It was especially true in Mexico as well. Yeah, especially because some parts of the city are not as safe as maybe Polanco or Condesa, which is mainly the places where expats are living in. But yes, I mean, yeah, you always live and visit nearby more than the whole city. You have to stand the traffic, nonetheless.
Sure. Okay, let's have a little look at your results. Yeah, it's an interesting history. If I need to do this. Now then, as we talked about earlier, before one clicks the little button that reveals your full bio, you talk about your returns, and your returns are for this period here. But
Indeed, yeah.
people can see there's a series of duck eggs here for 3 years, prior to which you were involved in 2014, from the end of 2014 to mid 2016. What was going on there?
Yeah, well, basically, I tried this. In this time, I was still at college. I studied law and business from 2010 to 2016, which was when I started working for CCalle. And I tried trading for a while, but it didn't work well for me. And then after I finished my studies and I started to research more about investing, the stock market and everything, and I get to know, well, not personally, but I heard about Francisco Parames, which is like we call him the Spanish Warren Buffett. I also read his book. I got introduced to value investing. I started reading more and more about value investing, and it was in 2020 when I decided to give it a try publicly. And then I started investing on eToro again, and this is the result. Yeah.
Yeah, you see, normally ignoring historical results, particularly ones that weren't great, would be something to pull you up on. But I suppose 4 years of absence or 3.5 years of absence, it's quite a long time. So it's fair enough. 2020, then you came back, and 11 months of the year, you got 33.5%. 2021, 2.78%. 2022, minus 8.81%. And 2023, 22.91%. So does that paint the picture of a pretty steady portfolio? Is that what you're going for? Something that doesn't drop too much, but can make gains, as you have done?
Well, the beginning was tough because I started right before the big fall of the pandemic. I started on February the 5th. And I think the stock market fell at about the end of February, kind of. So that was a tough ride. I wouldn't say I construct the portfolio to avoid volatility. It's more like I build a portfolio regarding the intrinsic value calculations that I do, and also the margin of safety, the perceived risk losing money, not because of volatility, but because maybe some intrinsic risk of the company. And that's how I build the portfolio. Volatility is what it is. I don't mind about it. I don't do any math on it, or it has to be what it has to be. If it is bumpy, well, welcome. It is not. If it is not, it's welcome also. What I will do is I will take advantage of the falling in prices to keep buying and to buy more if I can, and that's the goal, to compound the wealth. I will take advantage of everything I can.
When you're doing your valuation calculations and considerations, what sort of timeline are you working on? How far in the future are you looking to for these investments?
Well, I'm actually looking at a sustained earnings power. That's what I like to do. Like if companies go through cycles, I try to normalize them. Or if it is a secular growing company, I try to value the company as for what it is today. Also taking into consideration the growth. It's not like something that you don't value. You do value it if it is a source of value for the company, not only because growth for the sake of growth. You can throw money at a business and you can grow, but you need growth to be profitable. So if growth is profitable, I take it into account, but always regarding today, taking today as the view for the valuation. So I do free cash flow forecasts, but I don't trust much in them because I found during my investing journey that it is very tricky, because you give a lot of value to the not even foreseeable future, but 20 years from now and a growth forever rate. It does not value to me. I do multiples most of the time, and I take growth into consideration for the multiple that I apply. I love the balance sheet of the companies. That is what gives me the strength and the conviction to buy. And then earnings is what you will get. So balance sheet is what you have gotten until today, and earnings are what you will get in the future. You took that into consideration, but as usual, the intrinsic value calculation is only a proxy. It is not a mathematical exact number that everyone will arrive to. You have to know that it's an assumption, and you have your own assumptions, and someone else has their own. So I try to be conservative when I do the valuations.
All right, we're straying a little bit into the next section. For now, let's just keep running through some of these main metrics on eToro. Risk score for the last 7 months has been average 4, max 4 or 5, a little bit higher prior to then. I imagine that's not something you pay too much attention to. It just moves with market forces, whatever's happening.
Yeah, mainly, yeah. I don't do anything differently. It's always the same. I'm pretty much invested 100% all the time. So it is what it is. If it goes up or down, it is because of market conditions, not because of something I'm doing.
It is what it is. That's one of my pet hates, to hear people saying that sentence. But anyway,
sorry about that.
It starts off, and then there's a verb, and then there's a clarifier, and then it just goes back to the start again, like a snake eating its head. It is what it is. Anyway, it's fine. You're surrounded by Australians. Some of it's going to rub off, I guess. All right. Copier numbers. 145.
Yeah.
So is this the story of your eToro experience in the last few years? Or was this your high point here?
Yeah, indeed.
What was that, 160 or something?
To be honest, I don't pay much attention to that. But it should have been close to 190, I think, kind of.
Yeah. And how many times have you appeared on The Discover page. Is this a Discover page, Spurt?
No, that is not. That is well, eToro sent a notification to everyone, I guess.
Notification.
Yeah, one of these pop-ups like saying this trader has gained X% during the last 2 years, something like that. And then
what
a
was
lot of
yours?
people started copying me.
What do you remember your
Sorry?
exact notification? Do you remember the
No,
wording?
I don't. I probably have a picture, a screenshot somewhere, but
Yeah,
I don't
framed
remember.
on your wall.
No, not really, not really.
Okay. All right, but obviously that was a huge jump overnight, almost
Yeah, indeed.
from here to
It
here.
was, it was great. Yeah.
And look at this, 10 copiers have left in the last 7 days. We check back to see why that might be. It's because just the last few months, 3 reds in a row, doesn't take long for them to jump ship, does it?
Yeah, I mean, it's business as usual, I guess. People used to leave when things go south, but I always try to reassure all the copiers and everyone in eToro, because I share this post for everyone, like saying that when things businesses are dipping, it is the best time to buy and not to jump off the boat. And there was a study. Well, I've shared it many times, but there was a study by Peter Lynch fund, I think, if I remember well,
Yeah.
that like half of the investors didn't get to make any money or underperform the fund in all the period of Peter Lynch as a manager. Although Peter Lynch got an outstanding return of about 20%. So it is the human psyche that takes people to live when it gets painful, although it is not the right thing to do. It is painful to see, but I guess that we are wired that way.
Which one of your heroes was it who said that a lot of people have the brains for investing, but not the stomach?
No,
Was
yeah,
that
I
Buffett?
think it was Peter Lynch. Yeah,
Was
as
it
well.
Peter Lynch said that?
Yeah, I think so. Yeah.
Okay. All right, then trades per week and average holding time. Let's see if we can learn anything from that. Where is that now? Trades per week, 3.5. Average holding time, 19 months. Well, at least that, I mean, whether the 19 months or not is in dispute. For eToro, in eToro terms, that's a long time.
It is. Yeah. And the trades per week, it's mainly, well, if you go to history, you will see that I barely send anything. Yes, I sell the companies when I think they have arrived to my target price, but not many companies have gone out of the portfolio. I think I remember a couple of them, maximum four of them. I think I've completely sold during these years, and all the others are there because I keep them until, well, if I'm lucky, I keep them forever, and if I think that it's very overpriced, I sell them. Well, in the portfolio, there's an example right now, which is Louis Vuitton Moët Chandon. That company, I sold. I think I did that company at about 8% of my portfolio back like 2 years ago. But then it went up like a lot after the pandemic, and it reached, I think it was like about almost 900 euros per share. I sold almost all of it when it was trading at about 700. I missed a part of the upside, but it was already beyond my fair price for the company. So I sold almost all of it, and then I have bought it back when it has come down to 660, 670. So now it is almost at 3%. And I did a pretty decent amount of money there, and now that it has come down, I've bought it again because that's what you do. It's not
Again,
trading.
we're going to get into your portfolio in the next section. So let's just finish this bit off with discussing your communication. describe your sort of posting approach.
Well, I mainly share things I think are interesting regarding the companies that I own or regarding everything. Not much about the stock market conditions, because that I consider that much that is useful for investing. So yeah, I try to share a lot of things of the companies I own or I like or I'm following or I have on my watch list. And then also I try to reassure all the copiers and people that we own good businesses, and that the good thing to do is to keep buying if the company's price is falling, instead of panicking and going out and thinking that is not for me because I lost 10% of my money. Yeah. So that is basically what I do. And sometimes when things go very well, I also do a bit of PR, like sending some spam to everyone to read. But yeah, that's basically it.
Yeah, so a lot of your posts are sort of about the philosophy of investing and about certain aspects. Here's one: growth and high return on invested capital at 8 times earnings. Well, that's a case study. Crocs. Okay. And do you find your posts get plenty of engagement, or has that slowed down in recent months?
Not really. They never got too much engagement. It's been always a thing of some people like it. It's probably the people that you interact more with in the platform, rather than the general public or general copiers or whatever. But I like to share these because I know that people read them, although they don't interact, and it's always good to educate people in, I think, the right philosophy for investing, and about how the portfolio is taking shape. So that's
Well,
why I share it.
in the next section, we're going to see how your portfolio is taking shape, but only after this.
Do you copy?
Do you copy?
Do you copy?
Do you copy? Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Good times. Reminds me of all the people that have passed through the doors of the clubhouse, Cristia, in the last couple
so many
of years.
people, yeah.
All right, so getting into your portfolio now, let's have a little broad brush description. Asset classes, that's quite an easy one. 100% stocks.
Not too bad.
No ETFs, nothing else. That's quite
nothing.
straightforward.
Yeah.
And you're 100% invested?
Almost all of the time, yeah.
Okay, so you're almost all of the time invested. You never sell anything, but you're always on the lookout for when prices drop so you can take advantage of those scenarios.
Yeah.
Well, that's a circle that needs squaring. Where do you get the money from?
So I sometimes sell. It's not, I never sell. I sold Louis Vuitton, I told you, like a few months ago. In my portfolio, I had Dell at the beginning, which was a 10% of the portfolio, and I sold it all when the management did very well during the pandemic, spinning off VMware. And there have been some of these during these times. That's mainly where I get the money from. And then every I don't know, every couple months or so, I send some extra money to the portfolio on the first of every month, so I can have some more cash to allocate. But I almost always allocate the money in the same percentage or that I had until that moment. So
across the portfolio.
Across the portfolio, yeah. And unless there is something that I find not so attractive, and in that moment, or if something is stupidly attractive, like for example Crocs lately. So yeah, that's how I do it. That's how I look for opportunities. Mainly the money comes from selling positions.
Okay.
But
Let's
I don't
have a
do
look at
much.
the desync issue, because I mean, adding money every couple of months and usually spreading it across the portfolio, but not always, suggests there should be some sort of desync going on. Let's have a look at that. Now, there is some level of desync. If we compare invested column with value, it's not huge. I mean, Meta 11% to 17.3. Yeah, so there's some, but there's nothing horrific. I think it's fair to say. If someone copies you, they're going to get more or less the same portfolio as you, right?
Yeah, indeed, it's not a big difference. I would say that yes, it is an issue, but it is not a big issue because the percentages are not that different, and also because anyway they are buying great companies. The thing is that they would probably have a 2% extra in, I don't know, Meta or maybe Crocs or Teleperformance instead of Alibaba, because it has fallen during this last year. So yeah, it's not a big, I mean, I'm not worried about that. If I saw that it is becoming an issue, I would sell the position and rebuild the portfolio again, although that would trigger taxes, and I don't like that either, but
No,
it
who
will be
does?
the right thing to do. Yeah.
And 18 positions in your portfolio, is that kind of about average? That's the number you're comfortable with?
I don't actually have a goal regarding the number of assets. I do think that having a concentrated portfolio is more likely to beat the market, the benchmark, the SP 500 or whatever benchmark you use in the long term. And so I tend to have a concentrated portfolio. I would say that I'm comfortable holding over 15 to maybe 25, but I've never gotten to 23 or 22. I think I've always been around 20 companies in the portfolio, and yeah, I'm pretty comfortable with that. If you see that I have some tiny positions and that the top 5 or 6 make up for like 60% of the portfolio.
Yeah. Let's look at your top few positions then, why don't we?
Yeah.
At the top of the pops, we have 9988, which is the Hong Kong listing for Alibaba. Then we have Meta, Crocs, Baba coming in at number 4 as well. So I guess we got to combine these two stats. So you're looking more like 27 or in the invested column. Games Workshop is then, we'll have to say, 4th if we combine the two Babas.
Exactly.
And Ulta Beauty would be 5th. Yeah, and they're all, well, you can see the percentages. Let's just look at invested for now. Like over 18, over 10, over 10, 9, 9, 6. So yeah, those in total account for a fair slice of your portfolio.
Exactly, yes. And then there are some others that are a tiny part of the portfolio.
So let's talk about Baba and your hero, Charlie Munger. Are his feelings toward Baba different from yours today?
No, not really. I think, well, I don't know what Charlie thinks, but I think that Baba is a great company. It happens to be in China, which will probably be, well, that's why, I mean, always that you find good companies at cheap prices is because something is going wrong for them. In Alibaba's case is the Chinese government and being in China. But I think that lately the things are getting better, that the Chinese government is signaling the market that they are once again supporting the private market for tech companies and for all part of the businesses in China. So I think in that regard, things are improving. although sentiment is always slower than the real, like that the real event going on. So sentiment will follow eventually. And I mean, if you check the fundamentals of the company, you see that it has a very, very strong balance sheet. The cash position is insane, and you are buying the whole company for like about 8 times normalized earnings, and normalized are actually next year's earnings or this ongoing year. So it's a bargain, and you only find this at this price because it is placed in China. If you ask me, would you own this for the same price if you could buy Amazon at this price? No, I would buy Amazon if I could at 8 times earnings, but I can't. So I stick to Alibaba. I do ask for a wider margin of safety because the company is trading in China and its main operations are in China. Yes, I do. But I think fears are overstated at this price, and it eventually will have to vanish and come back to a sane place for the stock price. So that's pretty much about Alibaba in a short period of time.
Well, I hope Charlie lives to see it turn the corner.
I hope so too.
What age is he now? God, he must be getting on.
Like 99 or something like that.
Is he 99? Wow.
Kind of, yeah.
Well, speaking of advancing numbers, we're approaching the hour mark already, so maybe we should move it on to the next little bit and talk about your copiers.
Mm-hmm.
What kind of person should copy Cristia?
Well, I think that people who should copy me are people with a long-term view, looking for compound their wealth instead of having a short-term boost, which could happen, but I mean, that's not what we are looking for here in the portfolio. I am looking for good companies to compound our wealth over time. So people who should be on the boat are those who are trying to save money and plan their future. That's the people who should be here, and also people who are patient. I try to reassure everyone that things are going well. If the companies are not performing well, I will sell them, because I mean, I don't want companies whose fundamentals are getting worse and worse and worse every day. I won't go all down buying the dip if the dip is not attractive. So that is the people who should copy the portfolio. And I guess the next question is who shouldn't.
Such an easy role, this. Yes, go ahead.
and well, people looking for it's the opposite. People looking for a short-term boost, or people thinking that or people who expect me to be in green every month. That's not the people who should copy me. Maybe there is someone else who's trying to do that or accomplishing it, but it wouldn't be me. I'm not seeking low volatility or anything. I'm just trying to stick to good companies in the long term.
Do you know of any people who copy only you?
I know a few, yeah.
Yeah.
But those are mainly my family, so
Right.
I think they are a bit biased.
Mm-hmm.
They trust me, but
okay, and here's a question that might sound a little bit rude, but obviously it's not meant to be. It's to give you an opportunity to, well, answer it. What makes you so special?
That is a tough question. I think that the main thing that makes me special, if you can say so, is that I'm passionate about the stock market. I've studied it for a long time. Since I arrived to college, the first thing I did was enrolling in a stock market course that unfortunately they all only taught us about technical analysis and this stuff that now I've learned to hate. but it's yeah, I think it's passion what drives me, and also, well, there will be people with more experience than what I have, but I think I have a very unique mindset, and I've been living abroad for almost 10 years now, and I've learned many points of view. So when I value companies, I think all these mental models are coming to evaluation. So I think it's very unique.
Okay, so you say some of your family copy you and only you. I imagine that's not something you would recommend to others, to people generally, to copy only one PI. So the question is, if you can imagine an ideal portfolio with a number of PIs in it that are being copied, what's your role in that? And can you explain what the ideal copier portfolio looks like?
It's look, if you are a newbie in the stock market, I personally would advise to go for index funds. That is the easiest. If people are bad at choosing stocks, why should they be better at choosing stock managers? So I would advise them to go for the index fund. If they are a bit more knowledgeable, I would advise them to go for people who they rely on and that are following the right philosophy. That by this time, I think you already know that I'm speaking about value investing and any sort of value investing. So
Okay.
that's my view.
Interesting. Are you going to the eToro meetup in Abu Dhabi?
No, I can't. I recently married to my wife, so we are going on our honeymoon. So I can't be there.
Excuses.
But I will be in the next one. Will you?
I'm surprised your honeymoon isn't Abu Dhabi to coincide with that.
No.
Just popping out for
We
a
are
few
going to
hours,
Greece.
darling.
Indeed.
Okay, well then, speaking about eToro, can you think of any changes you would really love to see on the platform?
Yes. Well, first, now that we were speaking about it, I think that one major change I would urgently implement would be when copiers copy you, they should be copying the current value of the assets instead of the invested amount, which is more important, I think, when you're trading than when you are investing. That's my view. Because of course I'm an investor, not a trader. So I think that for me it makes more sense the value of the investment instead of the initial investment. That's one. I'm also thinking about giving visibility to good posts that I think that has been lost in the last year when eToro decided to get rid of the pin post of popular investors. I think that was a very good way to push the community to create good content instead of only spam. And probably I think of a third one would and it would be like addressing the misleading information that some people tend to give. Well, we have some cases. Felix Falax has spoken long about this issue. We all some people pop up on the top of my mind now, I guess, in everyone's. So yeah, misleading information is not only bad for those people, but also for the people who are using the platform in a legit and honest way. So that is something to address.
Bad for everyone, bad for eToro.
Yeah.
Okay, what other PI would you say you know best on a personal level?
Well, personally, like meeting someone, I've only known fund manager SEC because we were here together in Australia. But in terms of philosophy and alike thinking, I would say that Miguel Maeztu, who has been promoted to PI recently, his name on eToro is Seria Invest. You probably know him this way. I think Felix Falax has recently started copying him. I saw it in his last video. So yeah, so I think we are very alike. We have spoken a lot and shared some ideas, and I think he's the person who I've spoken the most with.
Is there like a WhatsApp group of Spanish PIs? And you'll get
No, not
together
really.
and
We no, not really. No, it's just luck, I guess, or maybe in Spain, value investing is spread. Or, I don't know. It's just random.
who's the highest profile Spanish PI?
I think it is Analysis Cíclico. Can it be?
Yeah,
I guess.
definitely. I'd say so. He has a very novel sort of approach, or unusual, I guess. Okay, so we've chewed the fat, Cristia, on many issues. Comes down to the final question. You know what the final question is?
No. What is the final question?
You've obviously listened to loads of episodes. Okay, the final question is, what's the one question that I didn't ask you during this chat that you wanted me to ask?
It's a good one. I think probably one of the things would be about recommending some content beyond books to people, like maybe podcast or that, like the ones we like the most, or something where we get ideas from, or something like that. That would be a great one. So, okay, now I ask my own question. I like, I'm gonna dive into my mobile phone now, checking who I'm following. So I love this one. This is called the Value Perspective podcast. It is made by Struthers, and they interview people with related and not related to the value to investing, but about like uncertainty and how you can address uncertain times. I love this one. Well, you all probably know the We Study Billionaires, Millennial Investing, the memo from Howard Marks. And those are pretty much the ones that come on top of the list on my phone right now. Yeah. I especially like the first one.
Another Sydney-based PI who loves We Study Billionaires and all their stuff is Daphne17. You ever come across him? Davide Marcotti.
No, I haven't. No.
I'm not sure where he is. He's been working in Ireland. He may be in Ireland, but he was Sydney-based. Have there not been any Australian things where you've all met up? No.
No.
Sharon Conley
I only
and people like that.
No, not really. I've gone to eToro once, and then I went to this meeting that they did here in Sydney, and the only PI there was SEC. So that's the only one I know. I guess I will have to send a message to the others so we can get to meet each other.
Well, it was fun to meet you, Cristia, and I think your message came across loud and clear today. So thank you very much for being with us today.
Likewise. Thank you for having me.
No problem. And I hope the honeymoon goes well.
Thanks.
All right. All the best. On that note, we'll call it a day. Cheers, Cristia.
Cheers.
That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.